It's not quite the middle of the week, not quite the end, but we're getting there. And welcome to today's session. My name is Luke Robinson, and I'm a business advisor here at Collective. And Collective, essentially think of us as your all in one online financial platform and financial solution for your small business. We pretty much handle the whole shebang when it comes to your finances, accounting, payroll, and all of that. But today, we have a little session we like to call Tax Tuesday. And essentially what it is, it's an AMA. It's an Ask Me Anything session, surrounding taxes, of course. Best accounting practices, best financial business practices, how to freelance in the best way. I'm here to answer any questions you got. But also keep in mind that this is information. Don't consider this, like official legal or tax advice or anything like that. So before you act on any of this information, go speak to a tax attorney, go speak to a CPA or somebody like that. I could be wrong with what I'm saying. The tax code is very complicated, and I've been wrong before. It's been known to happen. So just keep that in mind too. But let's go ahead and get started. I think we already have some questions that folks have been putting in the chat. Okay. Can you explain what backdating an S Corp is? Certainly. And first, let's kind of, I guess, address what an S Corp even is and what it even means to be an S Corp. So essentially, the first thing I would say is a lot of people have, a misrepresentation about what an S Corp actually is. An S Corp is a way to ask the government how to be taxed. It's a tax election. So you either have to be, an LLC, a corporation, a business entity before you elect the S Corp tax status with the IRS. And there's a lot of people that think that the S Corp, is a business entity by itself, but that's just not the case. It's a tax structure. So what you do first, and what Collective would do for you too, is if you don't already have one set up, we'd set up an LLC for you. That's the first step. And then you make an S Corp election with the IRS. Excuse me. And the reason why you want to do that, before you make an S Corp election, you pay a lot in the self-employment tax. And self-employment tax it's a flat rate of 15.3%. And before you become an S Corp, it's either subject to all of your money or a huge chunk of your net income. What your business makes, you pay that tax on your earnings. But what happens? So, for example, let's say that someone is making $100,000 a year through their business. Before they become an S Corp, how you'd come up with your self-employment tax is you take $100,000 and you'd multiply it by 15.3%. All of your money is subject to it when you're not an S Corp. But what happens with an S Corp election is technically you become an employee of your own business, pretty much. And since you're an employee, you pay yourself a wage. Your business will pay you a salary just like you'd receive if you work for someone else as a W-2 employee. But the cool thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. So, for example, let's say that, like I said earlier, let's assume someone makes $100,000. And with an S Corp, let's also assume that they pay themselves like a $40,000 salary. Let's just assume that that's a reasonable salary for their situation. So with an S Corp, that first $40,000 is the only chunk of money that's subject to the self-employment tax. The other $60,000, or just the rest of your money, like outside of it, those are considered distributions to yourself. And conceptually speaking, you can kind of think of that money as dividends. Some people will use that term. But long story short, that chunk of money is no longer subject to the self-employment tax at all. So, and if you do the math there, That's a tax savings of $9,180 a year in the self-employment tax. So it can be pretty advantageous to go the S corp route, once you reach a certain income level. I'm dreaming of the day that I make enough revenue to use your services. I'm about 20K short, and it feels like a chicken before the egg type of situation. Huge fan of your services. My friend uses it and loves it. Well, we're really excited to have you as a member when that day comes. And keep in mind, like, let me talk a little bit more about that too. I mean, Collective, before you join Collective and before you become an S corp, also too, Collective gives a general income recommendation of around $60,000. And the reason we do that is because when someone elects the S corp tax status, at around 60 grand, they're generally saving around $5,500 a year in taxes, in the self-employment tax. So that at 60K, those sorts of savings, that amount of money covers collective fee and then some for the year. So, it's kind of a good rule of thumb to say, okay, if I'm making at least $60,000, then I can reasonably expect to save more in taxes, or specifically more in the self-employment tax than I would pay collective. And that, that's very general, very general. Some people save a little bit differently at around $60,000. It kind of depends on their situation. But, let's say that your income, drops below the $60,000 mark a little bit. Like, it's okay. It's not a big deal. And you could technically still join Collective and, have us run your books and whatnot. But, you might be in a situation to where you're either breaking even with how much you're saving with the S corp and how much you're paying us, or, it's costing you a little bit of money. But it's totally fine that if you wanted to go ahead and join, and if you're not making $60,000 yet, that's okay. Okay, and I think this was already asked, but I forgot to answer it. Can you explain what backdating an S corp is? So thankfully, if you already have an LLC in place, and that's important. If you don't have an LLC in place and haven't been doing business as an LLC, then we can't backdate the S corp election. But if you have an LLC in place, we Collective can still backdate your S corp election to January 1st of this year. So, all the money that you've made since January 1st, we can kind of rope under the S corp tax rules and save you in the self-employment tax. And, essentially how you do that is, Collective would send in paperwork to the federal government, to the IRS, and request a backdated S corp election, essentially. And then, part of that is cleaning up your bookkeeping to that date as well, making sure everything fits in, with the S corp finances. So that's still possible. If I've been an LLC for this whole year, does the S corp election make sense? Yes, it might even make a little bit more sense because we can backdate your S corp election. If you've had an LLC in existence the entire year, that means that we can backdate it to January 1st of this year. So it could save you money. Now, it just kind of depends, though, like, whether or not that makes sense to do. It depends on how much money you're making, essentially. If you're making around that 60K mark and above in net income, and when I say net income, I mean, after your write-offs, after your business expenses and things like that. But if you're making 60K, then it could make sense for you. Why should we go with Collective to backdate our S corp? Well, I thought you'd never ask. That's a great situation, or a great question. So the reason why, in my opinion, Collective would be a good place to backdate the S corp election is how inexpensive it is. Usually when you go to a tax attorney or a CPA, or someone like that, they could charge you, thousands of dollars to do a retro S corp election, or something like that. But Collective, with us, there's only a $199 setup fee, onboarding fee that covers that. So that's a big difference for sure. How can we use collective as a tax write-off? Um, well, collective is a tax write-off. Collective is tax deductible. And essentially what that means is collective is a business expense. So you can write it off of your income. And essentially how, writing off expenses works is have a total amount of income, and then you just subtract your expenses from that income. And that's what you're taxed on. So, if your business in total makes $100,000, but you have business expenses like, like things like subscription to Collective, other marketing costs, things like that, then you can subtract all of those and you'll get a net income. And let's say you have $20,000 in expenses. Your net income is now $80,000, and you're only taxed on the 80 grand. So definitely, Collective is a tax write-off. All right. When do you not want to make an S corp election? Well, I think I would say mainly it has to do with income. If you are making a lot less than $60,000, like, if you're making $20,000 or $30,000, something like that, then it's just not worth it to go with a little bit more complicated tax structure if it's not going to save you a lot of money, kind of overall. So, just keep that in mind. The main one is income, but also there is a there are also some additional limitations when it comes to S corps, and one is that there's some ownership restrictions in the sense that you can only have up to 100 owners in your business with an S corp. So up to 100 shareholders rather. So if you ever, let's say that if you ever, wanted to go public or do a bunch of financing, or, have, several owners in your business, over 100, then an S corp election might not be the best fit for you. Okay. Can a partnership become an S corp? Yes, a partnership can make an S corp election. And essentially, a partnership is just when two or more people are on an LLC. That's what a partnership is. And essentially, you form the partnership and you just make an S corp election. All righty. Do you have to have a certain LLC structure to become an S corp? Um, no. I mean, you essentially just have to be an LLC. Like, there's no sort of like, specific thing you got to do when forming your LLC or anything like that. Making the S corp election happens with the IRS, and forming your LLC happens with the state. So they're two separate processes. So no, you don't have to have a certain or special LLC structure to become an S corp. Are there any 2024 advantages to becoming an S corp? Well, the advantage for 2024 is Collective being able to backdate the S corp election. Because if you've made some good money since January 1st of this year, then not backdating the S corp election could cost you thousands of dollars. Like, it could be a difference in thousands in tax savings. So definitely, that, like, the main advantage is just the potential of money that you could save by backdating an S corp election. Okay. Can a C corp become an S corp? Yes. So LLCs, C corps, partnerships, like all of those sorts of things can make an S corp election. And what happens, because again, like, making an S corp election is asking the federal government to tax you in a certain way. So if you're a C corp, for example, like if you just set up a corporation with the state, then the IRS automatically considers you a C corporation for tax purposes. So what that means is typically you're subject to double taxation, when you set up a corporation, meaning you'll be taxed at the corporate level. Like, there's a corporate income tax with how much money the corporation makes. And then when that money is passed on to shareholders, even through dividends or salaries or however that money gets passed down, then it's taxed again at the personal level. So, you don't want to form a corporation until you kind of know what you're doing and know what you need to do going forward. So, yes, you can make an S corp election on a corporation. Okay. Do you have to have employees when you have an S corp? Well, I mean, the only employee that's I guess required is you. Because when you have an S corp election, and especially if you're making money, then you're required to pay yourself a W-2 salary and put yourself on a W-2 paycheck. You know, you're a W-2 employee of your own business. So in that sense, you'll have an employee, but you're not required to have additional employees, outside of yourself. So, like it's not a requirement just to hire people to become an S corp. That doesn't really have anything to do with it. But you can hire people if you like, of course. Like you can have employees if you have an S corp. How long does it take to become an S corp? Well, really, the main question with that is how long does your state take to formalize an LLC or set up an LLC? Because you got to be an LLC or some sort of business entity like that before you can even make the S corp election. So really, when you ask how long does it take to be an S corp, it depends on how long it takes to register your LLC. And typically, like in California, for example, usually takes around a week, 6 or 7 days to form an LLC. In some states, they're instant and whatnot. And then what you do is, after you get the LLC set up, you send in paperwork to the IRS and request S corp tax status. But eventually, the IRS will send you a letter back either approving that or denying that. Now, if you've done anything right, then chances are that you'll get approved. But when you make an S corp election, you can go ahead and behave like you are an S corp before you even get that IRS determination letter back, because it could take several months to get that letter back from the IRS. Unfortunately, they're a little slow with it. So it doesn't take very long at all if you have an LLC already set up, because then we can just make the S corp election right away, and you can behave as if you're an S corp. I'm already an LLC. That's perfect. Yeah, if you're already an LLC, then it doesn't take long to make the S corp election. But just keep in mind, and what I'd suggest, and especially if you're interested in collective, I would schedule a call with one of our business advisors, and you can go, online to do that. You can send us a message on social media to set something up, but we have a June 30th deadline to backdate your S corp election if you have an existing LLC in place. And during the conversation, they'll go through your business, ask you some questions about your finances, and they'll see if an S corp is even in your best interest. So I'd encourage you to do that. What do you recommend for entrepreneurs to do to increase business profits? Well, really, there's only two things you can do to increase profits. One is, of course, the S corp election. That should, net more money to you theoretically because you're saving on the self-employment tax. That's one. Another is to optimize your expense write-offs. So, your tax, your business expenses, your deductions, just make sure that those are optimized and accounted for. And then really, in terms like in a tax context, that's really the only thing you can do to increase the business profits. Other than that, just of course, work more. Put in more hours, of course, but everyone knows that. But in a tax context, those are really the only things you can do. Why should we choose an S corp over a C corp? Well, I mean, it's a good question, but at the end of the day, that question depends entirely on your own situation. Because there's some situations where you need to go with an S corp, and there's some situations where you need to go with a C corp. And like for example, if you're at an income level that makes sense and whatnot, then an S corp or is probably in your best interest. But let's say that if you ever want to have more than 100 owners in your business, if you ever want to fundraise or do anything like that, you should probably go the C corp route. So it just kind of depends. Are the fees we pay to collective tax deductible? Yes, they are. Yep, it's a business expense. It's a write-off. So, and we would handle that too in your bookkeeping, in your accounting. We would write that off for you. All right. Does anything change with your accounting with an S corp? Yes, it does actually. So when you make an S corp election, unfortunately, to save that money on taxes, there's some hoops you got to jump through. There's some additional administrative pieces you got to take care of, and additional compliance issues to deal with. And I mean, one, expect like in the context of like in accounting, is now S corps are required to track a balance sheet, and you're not when you're just a sole proprietorship or an LLC. So that's one thing. And another thing is with an S corp election, you're still allowed to write off personal expenses that have to do with business. So, for example, what I'm talking about is essentially the home office deduction. So, like a portion of your mortgage interest, a portion of your rent, cleaning fees, utility bills, things like that. You can still write off those things as an S corp, but the thing is, those expenses are showing up in your personal account. They're not showing up in your business account. So, how it happens is the S corp will actually reimburse you, for certain personal expenses that are still allowed to be written off, and it's a way for the business to write them off and still keep things in a structured way. What kind of rules do you need to adopt to manage your S corp? Well, here's the good news about that as well, is that an S corp, so there's some people that think that an S corp triggers like a board of directors requirements, meeting minutes, things like that. And that's only with a C corp. That's only with a corporate entity structure. If you have an LLC with an S corp election, then none of that's required. You don't have to have a board of directors or anything like that. So there's not any rules, there's not any corporate rules like that with an S corp. But in terms of rules, I would say a rule of payroll. You're now required to pay yourself a paycheck, pay yourself a salary, when you didn't have to do that when you're just a sole proprietorship or an LLC alone. So, if you're asking about rules, that's one big one. Is that another sort of requirement or rule is the balance sheet tracking, and balance sheets, like, you don't have to track those with sole proprietorships or LLCs, but you do with an S corp. And another rule, or I guess kind of a restriction, is the S corp election restricts a little bit the ownership sort of details about your business, in the sense to where you can only, like I said earlier, you can only have up to 100 owners in your business and things like that when you have an S corp election. Okay. How how long do you have to have your business before becoming an S corp? Well, you can just start your business as an S corp. I mean, you can, let's say that you're just starting out and you're sure that you're going to make, good money, and you're pretty sure that you're going to make over that 60K mark, then you can start right away with an S corp election. And essentially, you just set up an LLC right away and make an S corp election right away. So there's not sort of a minimum time requirement. You got to be in business before you make an S corp election. And apologies, everyone. My throat's a little scratchy today for some reason. And I think I have time for one more question. Are there any additional S corp taxes or corporate taxes? Well, not on the federal level, but because you remained a pass-through entity on a federal level. So there's no additional corporate taxes or anything like that. Now, on the state level, that's something different, because unfortunately, there are certain states that will charge S corps a little bit more to operate in that state. There are some states that have, general corporation taxes, like New York, or excise taxes, or things like that. So that's always a good idea to examine as well. But I believe that's all the time that I have left today. I actually have to hop and have a conversation with a prospective collective member. But if you found this useful, and if you think an S corp might be in your best interest, then feel free to schedule a call with us. Go to our website, send us a message, and we'd love to talk through your business with you.